All right, good evening, everybody. How are we? Thank you so much for joining me. Hope everyone's well. I know that there are some people in here already. Naeem's already here. Welcome. Cassie, Food Dweller, thanks for being here. Let me just mute. Let's get rid of that one. Here we go. All right, how was everyone? Okay, cool. So I'm on a bit of a clock this evening, unfortunately. We're still filming for Channel 4. And I've got to leave for location tonight to shoot for the next couple of days and then through the rest of the week. So I'm going to try and keep this tight as I possibly can. Um, Maybe go to about 9, 9:15 at the very, very latest, because I've got like an hour and a half drive to get to location. And I still need to pack and do some other stuff. And there's one other thing that I haven't yet done, which I'm going to do when I get to my hotel. So let's have a look. I know that Undercover Secret Agent posted a question prior to us going live, so I can't get it up on the screen. But I did have a little bit of a browse of it a bit early on. And the question was around the fact that he's invested in a number of emerging market stocks, that he has exposure to the emerging markets. And he's slightly concerned about the whole situation with China and Taiwan. And he said that he's 16% down at this point in time. And he would normally be okay to just pound cost average in at lower cost, but he's concerned about the political tensions and the possible eventuality that China would do what Russia's doing at the moment and potentially invade Taiwan. So he's questioning whether or not, or he's asking my thoughts on him cashing out his portfolio whilst he's 16% down. I don't know if you're on here already, mate. This is a really, really difficult one. It's hard to say, and I can't really give you advice on this one. But I think whenever you're faced with situations like this, I often ask people just to try to ascertain whether anything has fundamentally changed as per your reason to invest in that part of the world, that region of the world. Now, obviously, war is a big, big, big change in circumstances. I guess the big question here is whether or not the Western world will be brave enough to sanction the likes of China, like they have done Russia. I personally don't know that they would. I mean, America is probably the one to look at in this equation. China owns a lot of American debt. So I really don't know, mate. I don't think that the response would be the same as it has been with Russia if China did invade Taiwan and try to absorb Taiwan back into that side of the world. Having said that, though, the US does have interest in Taiwan. But is it enough for them to, I don't know whether they'll go to war over it. I don't think so. But I don't know that sanctions necessarily would be a good thing against the likes of China, simply because there is so much going on. You know, China has established itself in the world as kind of like that service provider. You just think about the actual global impact China has. I mean, Russia is nowhere near. Yeah, obviously they're a big player in gas and, you know, metal, all that kind of stuff, resources like that. But services, it's a big, 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 big question mark as to what the US and the Western world would do with China. I don't have the answer to that. I think ultimately, though, mate, I think if you are going to be considering selling down that portfolio, you got to do what you think is going to best help you sleep at night. And I know that that's really, really hard. But if it did happen and things did go sideways, you've got to weigh up those two equations. You cash in now, yeah, you're down 16%. You can take that on the chin, but you stay in. Something does happen. It does go a little bit worse than you think it is going to. These are really important questions. I don't know the answer to that. I guess you've got to do what you feel is comfortable for you. I think the lesson here, though, is obviously within the portfolio. Hopefully, you haven't got a lot in your portfolio exposed to that part of the world. Again, this is where we talk about diversification and building an investment where you have exposure to different geographical regions, different sectors. If a small part of your portfolio is exposed out there, then I guess that's also something to look at, because if you only have small exposure, yes, it's painful for that smaller exposure, but from a wider point of view, how much of an impact is it going to have? That I don't know, because I can't see your portfolio. But yeah, you got to do what you feel is right, I guess, is what I'm trying to say there. All right. Ginger, I'm good. How you doing? Naeem. Matt, how you doing? Errol's on here. Wallace, how you doing? Ordinary shares. Let's have a look at this. Is ordinary shares a good option? My workplace is offering 2 pence each. Yes, I mean, if you're being offered shares at work at a discount, then yes. I mean, ordinary shares just means that you're not going to have any voting rights or anything like that. So most employers will get ordinary shares. You won't get any of the shares that are going to give you any voting rights or anything like that, or vetoes. So yeah, ordinary shares are good. If you can pick them up, then by all means try and pick them up if you can. All right. There aren't that many questions that have come through just at the moment. I'm just going to scan back through some of the ones that came on prior. Make sure I've covered, because there were a couple of people who put something in there. Undercover had like 6 or 7 or so comments just for that one question to provide context and everything. Yeah, there isn't anything else there that's question-wise. It's hellos more than anything else. But yeah, anyway, look, I hope that you guys are okay. I mean, tracking the markets, to be honest, I've not had time to track the markets properly over this past week or so. I've been extremely busy with things, and I'm actually behind on a lot of things, to be honest. And whilst this whole thing is great right now in terms of it's exciting that some of the stuff that I'm working on, equally it's been a bit of a distraction to the channel and some other things that I'm doing. There's literally not enough hours in the day for the next week or so. Certainly for the next 2 weeks. We're still shooting for another 2 weeks, and yeah, it's crazy at the moment. And if I'm honest, I'm struggling big time. And really, it's not sustainable. So I've got to think about maybe how I change things moving forward to give back a little bit of time. So I'm actually kinder to myself and not running myself into the ground. Yeah. And obviously, this is social media, and obviously, YouTube is a form of social media. People obviously talk about all the wins and the things that go really, really well. I'm very much in a mixed kind of place right now. Really, really am. Yeah, it is what it is, though. Let's have a look and see what we got. This is a good one from Gordon. I have commodities fund that have gone through the roof. Is now a good time to rebalance or tide the wave? If you're looking at that fund and it's done extremely well off the back of obviously oil, silver, and everything being up, if you want to rebalance, because things could continue to go up. I mean, I think oil prices will take another surge. I mean, I did the video about oil on Tuesday. Was it Tuesday or Friday? Friday. I did the video about oil. People are literally taking out CFDs at leverage for oil because there's so much hype around it at the moment. If you're sitting on quite a bit of profit, it might be worthwhile rebalancing right now, just to take some off the table for the time being. You can still hold the core of what you basically got, but it's definitely worthwhile rebalancing to see, where you might end up. But I think it's going to be very, very, I mean, volatile. Volatility is one of those things. But oil came down back end of last week. I've not tracked gold. Actually, let me have a look at gold and silver. Are they still up? I would imagine that they still are. Gold, but oil has been quite volatile last week. I knew some people who took out a position at, I think, $119. And obviously, I think oil, the last time I checked, was down at 104. So despite the fact that I was talking about, please don't leverage it, they leveraged. I think they did 5 times leverage. So I don't know how much. Hopefully they put a stop loss on it. Who knows? Where are we going? I don't want that. I don't want that. Commodities. There we go. Why is it giving me the markets when I've just asked for commodities? Let's go. Yeah. So to the month, gold is still up. Silver's still up. Silver's up quite a bit. I mean, gold's up 6.57%. Silver's up 9.74. Then you got copper. I mean, I don't know if anyone noticed the whole nickel squeeze over the last week or so. There was a massive short squeeze on nickel. It was absolutely nuts. They actually suspended trading for a period. I think it's come back down a little bit now, but yeah, that was really, really interesting. Wheat was also was also up loads. Last thing, I mean, month. I'm looking at wheat right now. It's up 38.39%. That's US wheat. So commodities right now are pretty good if you're holding them. So yeah, you may want to be balanced, but at the same time, you may want to hold your nerve. It really depends on what your outlook is and what you think is going to happen moving forward. Using free trade at the moment, looking for alternative investment apps that would complement and that fill the gaps by free trade. CFDs was what I was looking for. Anything you would recommend? You can use the likes of eToro, for example, mate. eToro will allow you to have access to CFDs if you wanted to trade CFDs. And obviously within that, you can access cryptos and stuff as well. So they might be a good alternative to complement Trading 212. Combined pensions or not? Yeah, I think so. I mean, look, I think if you've got past pensions, it's easier to have it all in one place than to just kind of like have them sat in the, unless they're defined benefit pensions. If they're defined benefits, then you just leave them as they are. But if they're defined contribution pensions, then it's worthwhile combining them into one place where you're able to see them and manage them a lot easier than having them in 3 or 4 different places. So I would say yes to that. There are a number of ways that you can do that as well. Hi Sarah, how you doing? Thanks for being here. I like this. You know what? That is my favorite conversation on the podcast so far. The one with John this week or last week as we're heading into the new week. Yeah, he's really, really great. It talks about mindset, behaviors, that kind of stuff. And all of those things are extremely important when it comes to um, achieving goals. And there is a monetary side to this because if you set goals and you think about that cycle of what that goal means to you, you're more likely to take action. And I say this all the time, even when it comes to finances. And you'll probably see this through the Channel 4 show as well. I talk a lot about goals and trying to get people to have something that they're working towards that actually means something, because a lot of the time the financial decisions that we have to make in the moment can be very, very painful. Unless they're tied into something that's much, much bigger, it's hard for people to be able to see the reason why they should make the change, that painful change, and endure that pain for a period of time. So yeah, that's my favorite conversation today. I want to have a few more of those, to be fair, on the podcast, because I really did enjoy it. Cheers, bro. I appreciate it. Thank you very much. This was actually from out in Dubai, by the way. Yeah, because we were out there over Christmas and New Year's, and it gets hot during the day, but in the evening, because you can have that massive contrast of daytime heat, right, and then the evening, like cool, you can feel quite cold. So we were out one evening, and I was just like, I felt I was shivering. So I went and got this one right here. But yeah, cheers, mate. Bear with me for a second. I don't know whether you can see I'm looking at the feed coming through here, and this is where Restream are such little sods, because last week I had to I thought I was going to move to a different streaming platform. And the one thing that Restream do that really annoys me is their packages are tiered. So I managed to get onto like a package where the quality was really, really good once I updated obviously the broadband. What's coming out right now, I don't like. It's stuttering, and I don't know whether that's the same for you guys. Let me know if it is. But I don't like the feed. For me, it's kind of like it's very juddery, and I need to fix that. So in order for me to fix that, I need to pay an extra $300, $300 to get you guys to be able to see this in full HD. It's an absolute joke. But I'm almost held ransom now because this is the streaming platform that I essentially use. But the pricing is absolutely nuts. It's just crazy. And yeah, I'm gonna have to fix this because I don't like what I'm seeing in the monitor right here. Anyway, let's have a look at Martin's question. Thank you, mate. I'm looking at tips and indexed linked UK gilts ETFs to help mitigate inflation and diversify my portfolio. Do you have any thoughts on how effective they could be? They could be, depending on what kind you're able to get and what the coupon on them are. Where are you sourcing these from as well? I mean, if you're looking at UK gilts, you're not going to get the best potential return from it because they're government. So government gilts typically return less and offer less in return because the UK government is never defaults on that kind of stuff. So it's less risk, therefore less reward. Have you looked at any investment grade corporate gilts at all? Maybe that could be something you could have a look at. Because the investment grade corporate gilts. So this will be from companies, by the way. Yeah, the likes of Apple, Tesco's, those kind of companies. They might offer you more potentially to help you offset inflation. But then again, inflation is at 5.4 right now. So I don't know what the yields on these things are at the moment. I don't know if you're going to get anything up to 5, but it will go some way to help you with it. But yeah, I mean, government gilts are a little bit safer than obviously corporate. But if you get like investment grade corporates, which are typically companies with a AAA rating with lots of cash in the bank, you might get a better yield or coupon from it. So maybe that's something to have a look at, mate. Thank you for the reminder, my friend. Food Dweller, always like the cheerleader one here. Like seriously, cheers. But if you haven't hit the like button, please do. Do you have any previous videos on how to fill a self-assessment form, or will you do a video about it? I don't have one for self-assessment. I'm not an accountant, so it's not something that I would actually cover. It's not my forte. I don't fill out my own self-assessment forms. I've got an accountant that does that for me. So it's not something that I would feel 100% confident making a video on because it's more of an accountancy-based kind of topic more than anything else. So yeah. I was wondering first, where did the UK get all that cash they gave Ukraine, and also is Ukraine meant to pay that cash back? Thanks. I have no idea. I mean, they'll probably print in the money more than anything else. That's probably what they would do. I mean, to be honest, though, we do have a budget for like humanitarian causes and stuff. So if it's not from the budget, they may be printing money. I don't think they'll print money for it though. It's probably from the existing budget. I'll be very, very surprised if Ukraine has to pay that back because it's for humanitarian purposes. So yeah, I don't think that they would have to pay it back. If it is from 10 years ago, mate, you probably want to have a look and see if it is a defined benefit, because if it is, that will be a guaranteed pension for life when you retire, and it could be quite valuable. You definitely wouldn't want to move that. No one would move that for you without you taking it. But it's definitely worth at least finding out whether it is a defined benefit or a defined contribution for sure. Because yeah, if it is a defined benefit, it's a big deal. Yeah. Carly, how you doing? I have got your message, by the way. I saw your email a bit earlier on. But I haven't had a look at it just yet. So what I'm going to do is I'll probably take a look at it maybe tomorrow evening. Because I've got to drive to location for to shoot for the next couple of days. I'll have some time tomorrow evening, so I'll come back to you on email tomorrow about that pension. Yeah. So, cheers, though. Appreciate you, Carly. Yeah, you're saying it keeps freezing. Cheers, Marky. Food Dweller is saying it keeps freezing as well. See, this is the thing that it's not my internet. So this is literally Restream being absolute sods and degrading the stream quality. Right, let me have a look at this. 1 second. Right, let me just see if I can actually fix this right now. I can't do it whilst I'm live. But I know that I've got all of the stream. Ah, there we go. Let's go here. No, don't want to do that. What's this doing? It's not taking it through OBS. It's not taking it through OBS. Right, bear me 1 second, guys. Whilst I'm doing this, just have a little look at this quickly. You may have noticed we have a sponsor for this channel. That sponsor is Wealthify. Now, Wealthify is on a mission to make investing easy and affordable for everyone. They're challenging people to think differently and do more with their savings. They promise no complicated jargon, no daunting fees, just straightforward, effortless investing. Now, Wealthify are offering a cashback, a £200 cashback if you transfer an ISA or a pension to them, or you could have £400 if you transfer both. Terms and conditions do apply. I've pinned in the comments down below a link to get you to those terms and conditions so you can go and check them out. You have to register for the cashback by May 1st, 2022, and you will have 6 months to complete the transfer of your ISA or your pension or both if you are doing both. Not only that, if you invest with Wealthify before the 1st of June 2022, you could be entered into a prize draw for a whopping £20,000. That is a whole year's ISA subscription. Entries for the prize draw close on June 1st, 2022. I've provided a link down below that will give you more information on how you can actually enter. Good luck if you do, but remember, when you invest, your capital is at risk. You could get back less than you put in, and Wealthify is authorized and regulated by the Financial Conduct Authority. All right, okay, so hopefully this is going to be a little bit better. Just having a play around in the background with some of this stuff. Okay, that does look a little bit better on my side. Hopefully it will stop freezing. But I need to sort this out with Restream. But yeah, my bad. All right, cool. Yeah, Collie's saying it's not freezing, so it might be intermittent with other people there. It's really annoying actually, to be honest. But here we go. Just looking through the questions. Right, there's a REIT question on here. What are my thoughts on REITs, healthcare REITs, and REIT ETFs? Do they have a place in a dividend portfolio and growth one? Yeah, I mean, look, the rules of a REIT is they have to pay out a large portion of their profits, essentially. So if you're looking to generate some kind of income or a dividend, they can work really, really well. I haven't had a look at healthcare REITs specifically, so I can't really comment on those. But REITs do have a really nice place in a dividend portfolio. And even in a growth one, if you choose to reinvest what it's paid out through other parts of your portfolio, they can play a really, really good role in them. So yeah. Good. This is good, mate. So you should have got you would have got a £25 kind of like a thing, wouldn't you, for using that? So yeah, good. Yeah, you're saying. I mean, this is the one thing. This is the beauty of this mic here. The audio is always going to be crisp, but I just don't like the video being really, really sketchy and stuff in on here. So hopefully that's okay though. All right. So is this an ISA question? I've maxed out my trading 212 ISA for 2122. I want to add another 20k into the ISA. Can I add it to the existing, or do I have to go to a different provider? You can't, if you've already maxed out the 20k for this current tax year, you've got to wait until the new tax year on April the 6th in order for you to be able to use up the remainder, well, your new ISA allowance. So you can't do it until April the 6th, but you don't have to go to another provider. You can just stay with Trading 212. But yeah, if you maxed it out, you've got to wait until April the 6th to pay in that 20k. Essentially, that's how the ISA rules work generally. What ETFs do you recommend? I'm just in stocks, and in April, I can again put money into my ISA. I don't know what ETF you should be investing in, mate, because I don't know what your investment goals are, your time horizon, or anything like that. You know, a lot of these markets that ETFs will actually cover are all down at this point in time. So your risk appetite is always going to be important. People obviously talk about, you know, the S&P 500 as being one, but even the S&P 500, if you look at, let's have a look at that market actually. Let's see what it's actually done over the past week, because it is down. Where is the S&P? Indices, major indices. Yeah, I mean, even the S&P is down right now. So let's see where we are 3 months in with the S&P. Will it allow me to do it here? Will it? 1 month. Yeah, I mean, it's only down 1.3% or so, which is the largest in there. It's going to have a lot more buoyancy and a lot more resilience, I would imagine, I would suspect, because obviously it's the 500 most, the biggest companies in the United States and arguably the world. But it is still going to be volatile as well, and maybe that could be a good place for you to start. But there are lots of ETFs, mate. You mean you've got emerging market ETFs, you've got ETFs that will cover the UK market. It really depends on where you want to invest and what your risk appetite is and what you're actually doing from an investment point of view. Errol, hi, Pick. Same age as you, investing regularly over 20 years and aiming for a place in the sun. Need to diversify my portfolio for 15% bonds. Where can I get more info on this sector? So this is the thing. People don't really talk about bonds that much, do they? Because obviously equity is the main engine. So that's sexy stuff. I guess one of the best places for you to probably find a really good selection of bonds, um, if you're using Vanguard, they've got a pretty good bond section there as well. But it really depends. There are different types of bonds. You know what I mean? You've got investment grade bonds, junk bonds, um, and they will all have different levels of like risk within them. Because people think that if you go and buy a bond, it can't go up and down. It can. It definitely can. But the idea is that with bonds, at least it will be less volatile than equities. And you know, obviously, you can trade your position in and out when it comes to a bond as well. So if you're looking at investment grade corporate bonds, which will be Apple, Amazon, companies like that looking to raise money, then you've got an element of safety, because the risk comes in whether you think the issuer of the bond, so the company, is likely to default. If they're an investment grade AAA company with lots of cash, they're not going to default, because it will damage their reputation when it comes to them issuing other bonds or looking to raise money elsewhere another time. So you have those, but then you have junk underneath them, which are companies that aren't necessarily as strong. They may not have the best credit rating. They might be a little bit more risky. And because you're taking a little bit more risk with those companies, they're going to offer you more in terms of a potential reward. But you need to be able to weigh off the pros and cons of those. And what you will find in Vanguard, what they do really, really well is they do actually have a good suite of bond kind of like ETFs or options within there that will have a mixture of corporate and junk, corporate gilt, investment grade. I don't know. Do they put junk in there? I've never seen a junk bond in Vanguard. Doesn't mean that they have them, but I've never seen one. So that may be a good option for you, mate. This is a good question. Do you see much more downside for Tesla? Lots of revaluations going on. Um, Long term, I don't know. I mean, literally, the amount of Teslas that are on the road right now is absolutely nuts. I mean, I'm noticing it because when I'm rocking up to supercharging stations, like there are so many Model 3s, and now they're delivering Model Ys to the UK. And I know people in the service center close to me, like they have Model Ys going out the door. It almost feels like every hour. There is so much. So even where I live right now, so when I first moved in here, probably about 6, 7 years ago, I was the only one with a Tesla. I literally drive around the corner. There's another six where I live right now. And those six have arrived in the past 2 weeks. They are selling cars hand over fist right now. So whilst they're looking at revaluation, recalls and revaluations and all that kind of stuff, long-term picture is very, 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 very good for Tesla. Really, really good. So I think long term, I've always been quite bullish on them. I think they're just going to absolutely smash it. They really, really are. Um, yeah, and we've not even spoken about the other vehicles that they've got that aren't even released just yet. But the Model Y and the Model 3 have really, really changed the game. But that's what Elon was aiming for. The Model S that I've got was kind of supposed to be that established, kind of like a little bit of a cult following, um, a little bit more expensive, I guess, then to launch like the Model 3, which would be more mass, kind of affordable Model Y as well. And they've done a cracking job with it. Can you save income tax by getting married? There are benefits to tax positions when you get married. Um, Income tax, though, you need to speak to an accountant. I'm not an accountant, mate, but there are benefits for getting married from a tax point of view, for sure. But that's not my area of expertise, so I can't really comment and give you like a nuanced answer on that. You need an accountant for that, mate. Yeah, this is interesting. I mean, look, even if you just have a look at what's going on at the minute, look at oil prices, right? Fuel prices. Fuel prices are nuts, nuts, absolutely crazy. And it's funny because I was speaking to one of my other mates who bought a Tesla. He loves my Tesla, so he went and bought one as well. And he's laughing at the moment, saying, "Yeah, it's great that we're in Teslas. We don't have to pay for the charging and all that kind of stuff," which is true, is great. But one thing that people are going to start realizing is if the car is costing so much to put fuel in, and there's a cheaper alternative like electric, where okay, I had a Model 3 because mine went into the garage maybe 2 or 3 weeks ago. I had a Model 3 and I charged this thing at one of the superchargers, and it was one of the newer ones, so you have to pay. On my one, I've got supercharging free for life. So to get a full tank, a full battery charge, which was 321 miles, it cost 25 quid for that. Right now, what way cheaper as an alternative, and it puts it in boom like that. I mean, it was full in 40 minutes from very, very low. Like I think I got there with like 5%. So from 5% to 100%, 321 miles for 26-ish pounds. It's extremely cost effective. And when people start clocking on to that fact and they get tired of ridiculous fuel costs to fill up the car, people will start to make the switch because people will just wake up and be like, actually, you know what? It's too expensive. And then you get into the whole point of like, it's these things are great to drive. They are awesome to drive. People talk about, yeah, there's no noise, you can't hear the engine. So, hey, listen, put your foot down. You forget that very, very quickly. So, I think with the whole Russia situation and the oil prices, it's only going to make a better case for Tesla and sales numbers. I think we'll see it probably, hopefully, in the next quarter and delivery numbers and orders. See if they see a spike as a result of it. But I think it will drive people more towards EV. Yeah. Yeah, I mean, look, I know that because the demand is so great, I know that they've just increased the price of the three now. I think they've just increased it by like another couple of thousand or so. But then, you can afford to do that when you're selling so many cars and there's so much demand. You can afford to put up the price by 2K because people want to buy them. I mean, there's a waiting list for these things right now. Like even to buy a second-hand one of my old neighbors, her dad bought a Model 3, and apparently he paid something like 50 grand for like one of the top range, like top spec Model 3s. And he would have paid a premium for that because there are so few of them around on the open market right now. And the wait list for that is huge. So yeah, we should be getting another model though. I think Elon's already kind of like hinted towards the fact that there will be another model, which will be slightly kind of like cheaper, which will be a smaller condensed version. But yeah, videos to view. Welcome, mate. How you doing? Nathan, what's my opinion on peer-to-peer investing through a lending platform, Funding Circle? Is it something you do yourself, trying to diversify in the future once new applicants are accepted? I don't do peer-to-peer myself, mate. I know why people do it. People want to obviously invest in something that could obviously give them a really good return. But the way I see it is like, well, why would I invest in a startup company, have stipulations around the money that I invest? Because a lot of the time you can't actually get that money. You can't just cash in your money. You have to wait for certain things to happen in order for you to get a return on investment in most cases, not all. I know you can find some where they'll be like, oh, we'll give you, X% per month or whatever. But in most cases, they do have stipulations to it. So I don't do it myself when I can just invest in some of the bigger companies in the world. I just don't touch it personally. But I can see the attraction for it for people who want to diversify like yourself, mate. But it's just not something that I do. It doesn't mean that you shouldn't do it, though. Is it foolish to be only 10% cash and 90% in ETFs and a REIT? Not necessarily. It depends on what your risk appetite is, mate. If you're going high risk, some people would argue maybe you've got too much cash. If you're kind of middle of the road, then you can argue that maybe you've still got too much exposed on ETFs because the ETFs won't have anything else apart from like stocks, really, to be honest, equities, which is the stuff that's suffering and is volatile right now. So it really depends, mate. It really depends on what your outlook is and what you're investing for, what your risk appetite is, to be honest. If you're proper like high risk, you're probably about right. Probably. I know you just put something else on here. One second, let's just get to this because you've added to this as well, haven't you? Oh, if you want to buy a small property next year and have 80% deposit in trading 212 markets, even though times are uncertain, 10% more is 4 months off a mortgage. Mate, listen, you are gambling big time. If you're looking to buy a property next year and you've got most of your money in the markets, huge gamble. What happens if everything falls off a cliff tomorrow? What happens if there's like China invades Taiwan and everything just then goes to pot? Then what? I mean, in this instance, like what's the prize? What's the goal here? Is it to make more money in the markets or is it to buy a house? It's prioritizing the goal more than anything else. But yeah, I mean, I think I wouldn't say foolish, but I would definitely say that you're taking a lot of risk, mate. Definitely, especially if you're looking to buy a house. GT Playboy, how you doing? Welcome, welcome. What's this? Zupa is seized. Hang, what? Is that recent news, mate? What do you mean by seized? Let me know what you mean by seized, mate. Because they're still trading, surely. Oh wow. Okay. Well, that was in December. They announced this. I wasn't aware of that. Just goes to show how much I actually follow some of this stuff. I mean, look, I think a lot of the time when you're running a business like that, obviously they take a bit of a margin on money that they might raise, or they take a fee for setting up campaigns and stuff. It may just not have been a sustainable business that it was actually making money for them, to be honest. I think if you've invested with them though, your money will still be safe, but because it's already with the companies that it was intended for. But it's a shame to see this kind of stuff, really, to be honest. But they probably had issues with profitability, mate. It's often the reasons why most companies cease trading. Interesting that I didn't know that. Cheers. Um, we do live in precarious times right now. Okay, let's have a look at this, Marika. I'm about to buy a property for 100 grand. Well done. Going to be mortgage free and would like to get another buy to let later on and refinance. What should I look out in terms of judging the market, i.e., interest rates? Interest rates are going to play a big part into that. Certainly. I mean, look, we've got the Fed with an announcement. It's going to be this week, the 16th. That will probably inform what our local central bank is going to do. The Bank of England, Andrew Bailey, and that lot. We know that they're going to be interest rate hikes. I mean, it's a double-edged sword, really, because I think if you see interest rates go up, it will probably cool the market a little bit more. So you may see property prices fall because there won't be as much demand. But at the same time, the knowledge that there will likely be interest rate hikes can mean that you see a sudden boom in the market because people are like, well, rates are going to go up. So I'm going to try and see if I can lock myself into a mortgage that is lower now, in opposed to wait 12 months when interest rates are going to be way, way higher. So it can have a converse effect. But definitely keep an eye on interest rates. Obviously, if you're looking at a buy to let, then what you are going to need is you're going to need, a larger deposit, 25% roughly, is what you're going to need in terms of a deposit. So just bear that in mind, mate. But yeah, interest rates will play a big part because it will potentially eat into your rental yield and the money that you'll make on a month-to-month basis as well. Mate, let's put it this way. Okay, so I can't advise you on what you should or should not be doing, obviously. But let's put it this way. I know that I need cash in about 18 months' time. I moved money out in January because I was like, okay, it's getting closer and closer to the point where I'm going to need the cash. And we didn't know the whole Russia Ukraine thing was going to happen in January when I took money out and cashed in. I took profits, cashed in some of my individual stocks. That money is now sat on the side. So I didn't know that any of this was going to happen. But for me, I'm looking forward thinking, okay, 12 to 18 months, I'm going to need cash. I'm still going to need a little bit more cash, but most of that will come from business. I cannot afford for the markets to crash right now and then have to wait 3 or 4 years on the recovery because my goal is not going to wait that long. So if you're looking to buy a house in 12 months time, mate, or within the next 12 months, you've got it in the market, it's extremely risky. Like, I don't care how much money I can make on the markets. What I care about is that the 50K that I pulled out remains intact for me to be able to go off and do what I want to do. That's more about life and personal goals than invested in the markets to make money. So it's prioritizing the goal more than anything else. I just think you need to think very, very carefully about it. Really, really think carefully about it to make sure that you're comfortable with it. If the market did crash, you're not buying a house, mate. So if the house is the goal, you should really keep an eye on that being the goal and that being the main thing that you prioritize. It is for me, and I'm not buying a house. Well, potentially will be buying a house, but abroad. But I need the cash, and I know that I need the cash. So yeah. Um, okay, this is a good one on mortgages. Okay, AA, I'm going to come to you in a second. Let me just get to this one. Thank you for that super chat, by the way. I've decided to overpay my mortgage by 10% rather than invest it for the next 2 years. Listen, if that makes you sleep better at night, kudos, mate. Trust me. These kind of things, look, you could have done the whole calculation of, if you paid down 10%, how much is that likely to save you in terms of interest? It might be a few £1,000s. But then if you take the amount that you've paid off your mortgage and you put that into the market, how much are you likely to make? If you made 5%, what does that actually equate to when you look at how much it saved you in interest? There's always a mathematical equation to this, right? But the bigger question is, what helps you sleep better at night? If what you've just done there helps you sleep better at night, knowing that you've got to pay off your you've saved yourself interest and your mortgage is probably going to end a little bit earlier, then mate, that is the 100% right thing to do. 100%. So well done, man. Let me just get to AA quickly. Again, thanks for the super chat, mate. Hope you're well. If you had a choice between one Bitcoin or 40k pounds in S&P 500 and that to hold for 10 years, which would you rather have and why? This is an interesting one. See, I had this in my Discord group earlier in the week, and I didn't answer it because it then led to a really nice trend conversation of people talking about why they would choose what. If I didn't need the money and it was a pure punt, I would go with a Bitcoin because I think in 10 years' time, the states have just released a little bit more legislation around or clarification on what they think about in terms of like cryptocurrencies and possible regulation and things that Biden's kind of set out. Whilst I think Bitcoin had a bit of a wobble off the back of that, whilst that's seen negatively, I think ultimately for where Bitcoin and cryptocurrency needs to go, I think it's a good thing. 10 years, I would go Bitcoin because you would have a huge potential for payout, massive, massive returns if it goes to where we think it's going to go and where everybody believes it's going to go. So I would go Bitcoin if I the 40k didn't really care about it, just put it away. That's what I would do. But yeah, S&P 500 is still a good bet though. But I just don't think that you're going to get the kind of growth that you'll get, the potential growth from Bitcoin in the S&P. The S&P is more established. It's companies. Bitcoin is more, I guess, groundbreaking. The impact for it and the things that it could do, in my mind, is far more potent than the S&P 500. Like Bitcoin is revolutionary. So yeah. Do you think interest rates will ever go up a lot? What will ever go up a lot ever again? Given how much debt countries are in, and every time they're about to raise interest rates, something happens. That's interesting. I mean, the interest rates will be depending on how effectively they're able to control inflation. Do I think it will ever get back to the 12-15% of like the 70s? Probably not. No. I mean, look, back then there was very little debt. I mean, they still had debt. Countries still had debt, but like the debt numbers these days are just nuts. Like Rishi's in a bit of a bind at the moment. He needs to raise 12 billion quid. And really, there are three ways he can raise 12 billion quid to help combat this whole cost of living, energy prices, that whole crisis, right? He can either cut salaries to teachers, nurses, policemen, firefighters, all that kind of stuff, which is going to be very, very unpopular. He can either then, this is the third option, cut military spending, which, well, Russia's just invaded Ukraine. So do people really want him to cut military budgets given where we are right now and the potential for conflict moving forward and the inability to defend ourselves? Or he needs to borrow more money, which means it puts more money on that debt. And if you've ever seen the debt clock, by the way, it's mind-boggling. Like just seeing those numbers trace up every second. It's scary how much how much we owe. It's absolutely nuts. That needs to be paid back. So the interest rates do tie into that. I think for the longest time, they've tried to keep the interest rates in tow so that there isn't a huge impact on the debt bubble. We used to speak about the debt bubble back in 2014, 15, 16. It was a massive, massive concern back then. And it was large back then, but we've added even more now, especially with COVID. So interest rates have to be controlled so that it doesn't negatively impact that. Because otherwise, if the debt bubble, if everyone had soaring interest rates, countries will go bust. Like literally, countries will go bust. It would be horrible anyway. But yeah, potentially. But I don't think it will ever go up to 12, 15% in the 70s. No way. Here's Spencer. Let's have a look at this, Spencer. I'm not down that much today, but still in the red. If it stays in the red for the next 2 to 4 years, compound will not work. Then I take it. So compound will only work if one's in the green. Then yes. Well, for the money that you already have in, if it's going down, then obviously you're not getting that compound effect. I mean, you're not. But if you're pound cost averaging, then you will get the compound effect if the market's kind of like if on any growth that you see in the markets. But yeah, it's always a tricky time when markets are volatile like this and things kind of like sit in the red and everything. You just have to be patient. It's really really hard though. I know because you're battling human psychology. Like you want to protect yourself. You can't help but want to cash in and get out and prevent yourself from potentially feeling more pain, more hurt. It's so hard. It really really is. So I'm thinking of taking 50K out of my 401k to do much needed home repairs. I plan on fixing home and refinance in about 6 months, pay back my 401k loan. Do you think that's a valid idea? So, right, it's hard for me to comment, mate, because 401k tells me that you're in the States. And I'm not 100% okay on how, because for example, in the UK, you can't take a loan from your pension, which is a 401k in the States. If you have the ability to take a loan from it, then obviously you can exercise that option. But I don't know the intricacies around your legislation on loans from a 401k, if that makes any sense. Is there an interest rate attached to that? I don't know. Can you get that money elsewhere? Because if you take money out of the 401k, I'm assuming it's going to be invested. So you're missing out on investment growth. And if you're then paying an interest rate, it's a double hit. But again, I don't know the full intricacies of a 401k from a US legislation point of view. So I can't really say that. My only question would be, is there another way for you to be able to source that 50K as an alternative to the 401k? But I'm saying that not really knowing the intricacies of how the loans from a 401k work because I'm based in the UK. So you're saying it's interest free, so there's no interest to pay, but you're taking the money out, so you're potentially missing out on market growth. And I wonder whether if you took out just a normal loan, would the interest that you would pay on a normal loan potentially come up less than the potential returns that you would get from the markets? That I don't know, but that would be a key consideration in my view. Is it a good time to invest in dividend ETFs when you see a crash coming soon? Now, let's have a look at dividend. Maybe I don't want to answer this from a dividend ETF point of view. I think you need to step one back a little bit and think about dividend companies. So when you look at market volatility, market crashes, a lot of people, and I've made a video on this talking about how do you inflation proof yourself? How do you have some resilience against market fluctuations when the markets are volatile? The answer to that is you would go towards more established companies, like companies that provide services or products in the things that we need day to day: energy, right? Food, those kind of things. The reality is that those kind of companies are likely to be the dividend paying companies. So as people flock from maybe growth and cash out from there looking for a safer kind of environment, although your capital's still at risk, then go into a dividend paying company makes some kind of sense from a risk management point of view. So they can be very, very good. If you can find an ETF that has a good number of that, where the sole purpose is investing in dividend companies, then that could be a really good option for you as well. So it may be a good time, but it really depends on, what happens moving forward. But I've certainly spoken about the fact that when you're building a portfolio, you're invested, having those stable companies, those big established companies, the Coca-Colas, companies like that, AT&T, that are paying dividends, those are your more established businesses. They're slightly more insulated against, inflation and, I guess, economic issues, because people are always going to need their services. You have to eat, you have to, heat your home, you have to communicate. They're insulated to a certain degree. Thank you, mate. I appreciate that. Thank you very, very much. Can you recommend an ISA for an older person, please? Thanks. Yeah, I mean, look, um, it depends what you want it for. Um, it depends what you want it for, to be honest. I mean, and depending on how old you are as well, and your purpose for wanting one, because I'm just thinking here, lifetime ISAs will be great if you're trying to, if your priority is maybe retirement and income. A lifetime ISA will be awesome. You get some free money from the government as well, killing two birds with one stone there. But then just the normal investment ISA will do good as well. You can still generate your income tax free. You're just not going to get the 25% bonus from the government, although you're limited to 4K, £1,000 being the max. So maybe having a good look at a lifetime ISA, that could be a good place to start potentially. Yeah, depending on what your goals are, particularly if you are thinking about retirement. Okay. Can you give any information about what will happen to shares? I have a company recently suspended on the LSE. Yeah. Yes. So, that's a tricky one, mate. I've not followed it. I heard about it on Thursday or Friday, and I've not looked into it. If they're suspended, you're not going to be able to do anything at all. You're not going to be able to sell. You're not going to, because that's their part. That's part of the whole Roman Abramovich thing. So Chelsea's a prime example, right? Accounts are frozen, everything. You can't do anything right now. And I think, did they not? I'm sure that I saw a comment saying that they lost their listing on the London Stock Exchange. If they did, mate, it could be very, very ugly. But I need to have a look into it in order to give you like a full thing. Because literally, I only saw a couple of headlines last week. I didn't read anything about it. But typically, if it's suspended, you can't sell. And if the share price, I mean, what is the share price right now? 1 second. Okay, that didn't work. Let me go to here instead. Look at this instead. So right, Evraz PLC. Because their board quit, didn't they, as well? I know that I saw a comment or something like that as well on Friday. Actually, that was 12 hours ago, so I saw it over the weekend. Yeah, they quit en masse. in protest against it. I need to read more to be able to give you a proper view, because I'm just scanning through things at the moment. I mean, the share price is still at what, £80? Yeah, so it's suspended. You won't be able to sell, but I will need to have a look into it to give you a proper answer, nuanced answer on it. You know what? I did a podcast on Friday where I was talking about this, and I'll tell you where it's going to kick off. It's going to kick off when you find out in the next round of financial accounts that all of these companies have made X amount of billions in profit. Then people are going to kick off, because you're seeing huge energy price increases, massive, like double sometimes for a lot of people, right? And they're saying, well, this is fair, this is fair, this is fair. Then to post ridiculous profits, that's when people are going to kick off. And I think this is, on that podcast, I kind of mentioned that you have to look at it from a consumer and investor's point of view. Like, we can complain about it, but the only way that we can participate in that profit is by being invested in those companies. Because if you're invested and they're posting those kind of profits, the share price is going to increase, which means that you actually get a cut of that profit in some way, shape, or form via an investment portfolio. It's just really, really, I can't wait to see the numbers, but there will be unrest because of it. And Rishi Sunak needs to step in. The government needs to step in. Someone was saying, they were talking about what was it, a windfall tax or something like on the energy companies. And one of the MPs who got paid 1.3 million quid by one of the energy companies was saying, oh, they're already struggling. It's like, what planet do you live on, mate? Like, seriously, like there's lining your pockets and having allegiances that you care about and being in your little selfish silo of yourself. Then there's everybody else. Like, you have to think outside of your realm of existence, and that's often the problem with people. It's all about what happens within my realm of existence. Sod everybody else. Nobody cares. And we have to care about what happens to everybody else, because otherwise we find ourselves in this situation where, actually, you know what? Yeah, if you're holding shares and you're working for any of the energy companies, who affiliated them in some way, positioned to profit, yeah, you're going to profit. You're going to love it. But everybody else suffers. It's just not right. It's not right. I've got another 12 minutes on this, guys. So let's get through some of these. I started to invest early this year. Pound cost averaging into index funds. Is pound cost averaging better than putting a lump sum in during this market downturn? Well, traditionally speaking, putting a lump sum in does better than if you're pound cost averaging on a monthly basis. The numbers just tell us that a lump sum is in, but the timing is also very, very important. If you're in a downturn and you put a lump sum in, obviously you might then see your lump sum reduce in value over that period of time as well. If you're buying on a monthly basis, it doesn't really matter, because you're buying at a discount every single month and riding the wave on the way up. But the lump sum having gone in, provided it doesn't fall too far down, will typically perform better on the way up than if you actually pound cost averaged all the way in. I think I'll have to write off my investment. I'm new to investing and went all in with, yeah. I think I lost a lot of my money. I put in, so I'm not sure when or if so we resume trading. Yeah, I mean, it's a tough one, mate. I think sanctions will probably have to be lifted before you're going to be able to trade on those, to be fair. Yeah, 80 pence per share. Yes, it was 80 pence and 89, well, 80.89. And I keep forgetting this, but on the London Stock Exchange, everything's displayed in pence. So they're trying to double my energy from 307 watt to 740. That's crazy. You know what? I'm in a deal right now, and I think it ends in like May or June. And I left British Gas because they were expensive. I went to People's Energy. People's Energy obviously went bust. So now I'm back with British Gas, and I'm not looking forward to the new energy estimates. I upped my direct debit the other day, and I know that I'm going to owe like a chunk at some point. Um, but yeah, I mean, that is absolutely insane. That's insane. 740 a month. That's bonkers. That is absolutely bonkers. What's that per year? That's £8,880 a year. Wow. And they'll be sitting on a few billion profit for sure. I tell you that right now. That's with Shell Energy. All right, we'll be avoiding them at all costs for sure. Let's have a look at this one. This will be the last one I'm going to take. My question is regarding my Trading 212 ISA account. If I buy and sell stocks, is it still the profit in there tax-free? Yes, it is. Anything that you buy or sell for profit in an ISA is completely tax-free. So yeah, I'll tell you what, on that, because video reviews just talking about long johns and all that. On Amazon, I've been meaning to look at this. There's a wearable like hot water bottle, apparently. I'm thinking of getting one of those. And you can just wear it around the house, and that will save you a little bit on energy. It's sad that people are gonna that you have to think about resorting to that kind of stuff, but it's just absolutely nuts. But these are the times that we live in, and Rishi, hopefully, he needs to do something. And I keep talking about, streamlining finances and budgeting and making sure your emergency funds are all there. Those are some of the basic things that we all need to be doing right now. I know that I'm doing it. Like I've got cash set aside. Yes, it's painful to see it there in cash. I'm thinking about staking some of it as well. But I haven't actually got round to that just yet. I'll probably do that in the next couple of weeks once we finish filming. But yeah, something needs to be done, really, to be honest. But guys, I appreciate you as always. Yeah, it's a busy couple of weeks moving ahead. Once I've finished with the filming, we can have a little bit of press. I need to think about some things for the channel, to be honest. Yeah, I really, really do. I've not paid as much attention to the channel for the last maybe 2-3 weeks, purely because things have just been nuts. Things have been crazy. And more and more and more, I'm coming to realize that I'm doing quite a lot, and it's just me doing it. And when other things come up that are outside of it, I'm stretched to the point that I'm struggling to cope, if I'm honest. I mean, I was hoping the magazine was going to be out this weekend. That's not going to happen. And the reality is I've got so many other responsibilities elsewhere that I'm going to have to give the channel a really big rethink once all of this is said and done, because I need to get a little bit more balance. And what I'm thinking that might look like, in opposed to doing 2 videos a week, I might have to come down to like 1 video a week, and just do 1 video, 1 live Q&A. Yeah, I think that might have to be the case that I'm going to have to do moving forward. I haven't decided just yet, but it's a lot right now. I mean, I'm going to leave the house tonight. I'm going to be back briefly on Wednesday, and I'm not going to be back after Wednesday night until Saturday night. It's nuts. It's crazy. And then when I look at, the channel and the views have tailed off, and I don't know whether that's because I haven't been paying attention to it because I've been busy elsewhere and maybe rushing some of the content out. I have to have a look at it properly from a practical point of view, for the effort that goes into it and the time that I spend in it, to what's going to give me balance back. Because at the moment, I feel like I'm putting a lot of effort into the videos and everything like that without really getting much back on my side. And I'm spending more hours doing so. So I don't know. We'll see what happens. And I will obviously keep you guys up to date. If you're not joining the Discord group, definitely go and join the Discord group. I will. The link is in the description. It's the first link that you'll come across there. But yeah, I've got to. I've literally got a pack, and I've got a jet. And yeah, catch you guys in a bit. Thank you so much for joining me this evening. And if you do enter into the Wealthify prize draw, by the way, good luck. 20 grand is a really, really good prize to have on there. So yeah, appreciate you guys. Catch you in a bit.